Good morning, good afternoon, and good evening to all you members of the TSB Nation. I'm Rustin Edwards, based in Geneva, with my esteemed, boiling hot commentary colleague, Mr. Matt Stanley in Dubai.
Morning, you smoking barrel legends.
Top of the morning to you there, sir.
Yes.
Or say
Yeah,
top of the afternoon.
nearly. Yeah, look, yeah, 10 to 12, Monday, the 5th of June. Welcome. Yeah, I mean, it's been a busy one for the oil market with a weekend full of meetings and everyone keeping their eyes on their phone. As long as you were invited, of course, because
Yes.
if you work for certain media outlets, you are banned, mate. Get out.
Yeah, that's a bit interesting that you got the woke crowd in Saudi Arabia and OPEC banning people who don't report the news the way we want you to report the news. Oh,
Well, yeah, I
horrible.
mean, it's a difficult one, isn't it? Because you're not really sure, what the reasons were behind it exactly. It is what it is. If that's the way that people have to approach it, then that's the way people approach it. The news value of what the group decide to do is ultimately what matters, not who actually. But it didn't seem to matter. Reuters, for example, who weren't allowed, seemed to be as sort of
Man, they
quick
still seem
and
to have people on the ground.
yeah. Which if you're a Reuters managing director, you're like, great, we don't have to pay for you to travel anymore. So I mean, there's a silver cloud, isn't there?
Well, here we are, post OPEC meeting with the announcements that they've made, and we've got crude up $1.50 from Friday's close at 77.64. It's down off the highs,
Yeah.
but nevertheless, it's kind of a muted response to what could appear to be bullish in some cases and bearish in other cases.
Yeah. I mean, look, I've got to put my sensible hat on where I don't get all like, negative, or really whatever. I just essentially that if we look at what the last 3 years, what the OPEC Plus group have done has been to stabilize markets, and they have done a very, very good job at that. The market has faith in the group, that they will look at things sensibly and not through rose-tinted glasses. And the market's confidence hasn't waned over the last 3 years. I would argue this time it's a little different because there were several side meetings. The group was getting together over a weekend. Novak flew over yesterday, I understand. There was a lot more politics this time because obviously the conflict's still going on. But this time it was really only one producer who's picked up the slack and come to the rescue of the group, and that is Saudi Arabia. A million barrel cut just for the month of July. But there's this caveat in there that it will be linked to what's happening in market dynamics. But yeah, it's a little, and I would argue that that's probably why the market is fairly muted. It depends. Was it priced in last week that the group had no choice but to cut? I was on the radio on Friday talking about it. My opinion was, even on Tuesday last week, that the group would probably maintain status quo. The more it went on, the week went on, the more I thought perhaps, second half of the year, July cuts in July, are those demand forecasts ringing true that they hoped? So I think that overall, the group did what was largely expected, and the only people who really can afford to do that are the Saudis. So I don't know. I think that's why we've seen some kind of muted response this morning.
Well, I think that's there's a lot to be played in that, and I think also what you have to take into consideration is that when they expanded the current cut levels to the end of cal 2024, that's an attempt, in my opinion, of OPEC trying to jawbone the market into a higher state of pricing, just because they're saying, hey, if you don't maintain our supply numbers like you had before you ran your supply and demand analysis for 2024, now we're really going to tighten the market if this whole holds true to the end of 2024. Therefore, you should have a far more bullish upside potential in your S&D analysis of where the market's going, because demand should be that much stronger. Now, I think this also does put into question the forward demand analysis that a lot of people have been touting about how the second half will be much stronger than it's going to be in the first half, and how Asia is going to be the recovering animal that is going to take the market to the stratosphere. The fact that the OPEC group is not even following their own analytics, which points to a larger demand profile in the second half, shows that they really probably do have a concern about where the forward demand profile sits, because of the data that's coming in is not showing that robust growth that everybody was hoping for. I mean, I think you're going to start seeing a lot of analysts starting to drag down their forward demand and forward price forecast because they're not seeing it yet, and it's not developed in the country. I mean, the PMIs from China were not strong. They're showing contraction in the manufacturing sector, which is the far more energy intensive side of everything else. I think, this week you'll have a further look at the Caxian PMIs, which is a smaller data set than the NBS data set out of China. But that's going to be on the service sector and the general PMI. And plus, you'll also see the Chinese import-export numbers come out. And I think when those numbers come out on Wednesday, if they're not robust, it's not going to play into the strong demand profile that everybody's looking for.
Yeah, I think that this is, we've mentioned this every week of the last, well, for season 2 really, has been disappointing demand data. The thing is, though, Edwards, is that it's not as disappointing as to trigger a collapse in flat price, because if you look at it, what's happened largely this year.
Well, no, you can't do that when you have OPEC keeps cutting every month because they can't understand what their own demand looks like.
No, that's right. But I mean, are they preempting? This is what I mean about, is it just Saudi who are preempting weak demand, or are the group not willing to, regardless of demand forecast, okay, well, let's just cash in while flat prices, say, above 70? Is this, are certain members of the group, much written about $80 a barrel is the kind of Goldilocks price for them, and the Saudis especially on that to balance fiscal budgets? Yeah, maybe that's right. But demand has been okay. Chinese demand data that's come in has been not as good as hoped, sometimes weaker, sometimes surprises a little bit to the upside. Largely, the US economy is just plodding along, doing okay. Europe, look, technical recessions in most of the most of the bloc's big economies there, yes, but again, demand plodding along. I would be interested to see what kind of flat price, what the reaction there would be to flat price if OPEC hadn't stepped in where they had. $50 a barrel, I don't know, but demand isn't that bad.
Well, I look at it that we've had 3.6 million barrels of OPEC cuts announced until yesterday. Now we have 4.6 million barrels. We've had 800,000 barrels of crude oil offline through Alberta and through Kirkuk, which that 800,000 barrels of supply did nothing to spur on the markets higher. It's actually been a very muted response. I think the market moves we've seen over the last couple of days on Thursday and Friday to the upside probably had more to do with people's anticipating what the U.S. Federal Reserve is going to do and less to do about OPEC, although some of it was short covering into the OPEC meeting because it was a weekend OPEC meeting, and nobody wants to be short going into an OPEC meeting. I think it'll be very interesting to see how the market actually digests all this data. We've got the Asian traders in now. You've got the European markets coming online now. U.S. markets will come on in around 2:00 Central European time. So how the market finally digests all this and ends up today, I think will sell volumes as to how the rest of the world interprets what OPEC's done on Sunday.
Yeah, I mean, look,
is it enough to stabilize, or is it just going to be window dressing at the moment until real data comes in?
Yeah, look, Brent is back where it was at the end of May. It's not pushed higher into like a 3-month high or anything like that. It's like I said, it's very much range bound. I think I would wait. We also had a debt ceiling issue, which is apparently resolved and signed off, and that was certainly
that bill was signed on Saturday.
So I was actually expecting, well, one could argue, did OPEC wait to meet tomorrow until yesterday to coincide with what is a fairly bullish on the economic sentiment front, a debt ceiling, the debt deal being signed off on Saturday? Were they hoping for some kind of double pronged rally? I don't know, but look, look, what it was as well, the OPEC meeting, it was a lot of spring cleaning. It was a lot of like, okay, let's tidy this up. Okay, you can now export that. This is your quota, Nigeria. That's your quota, Angola. It's all sort of been, a lot of issues were sort of raised, and okay, you can go there. I mean, Bloomberg argued this morning that the biggest winners were the UAE because they've had their quotas for next year increased.
They get a much bigger export quota, but I think rebasing everybody's quotas was probably the right thing to do optically anyway, because you had a lot of countries that were not even producing quotes to the quota that they've been allocated.
Yeah.
And it's kind of like, okay, you've had this quota for 3 years, you haven't touched it yet. Your real production level is this. And I think there a lot of the stress between the delegates, at least, what you can see in the Twitter sphere, was the fact that countries were being called out for not producing anywhere near their quota, therefore their quota gets reduced. And that's a big political decision, because it does make people have to admit that, yeah, okay, I might have 2 million barrels a day of production quota, but I'm really only doing 1.3.
Yeah, well, look, I mean, if Nigeria's production quota was left untouched, and it was the 2024 target that saw the downgrade being curbed from 1.7 million barrels to 1.3, equivalent to a 360,000 barrel decline.
Angola, which is what they normally produce, 1.3 out of Nigeria.
Yeah, exactly. I know, but I mean, their quota was like 1.74, so it was. Yeah, largely a lot of clearing up, and then Saudi really took it on the chin. I mean, Russian data is hard to sort of dissect and to have a look, but largely 200,000-300,000 barrels a day cut there. Whether that's by default or intentional or maintenance is difficult to opine on. But look, I don't know. It was only a year ago where OPEC increased production. Right, they said, okay, things are getting better, and people are allowed to increase production. A year later, and it's done a 360. Flat prices off 35% in the last year alone. So of course, the policies had to be adjusted. In the end, I don't think the group had a choice, and I think everyone else went, well, we're not going to do it. So Saudis went, right, fine, we'll do it, and this will signal to the market that we are, we speak on behalf of the group. And we will take responsibility. It's a 10% drop in what Saudi are capable of, basically.
Yeah, potentially a 10% drop. It depends on how you look at it from an annualized basis. From an annualized basis, the 1 million cut in July is only 100,000 a day. So, I mean, it just depends on how it all looks out from an annualized versus a daily actual production cut. But nevertheless, I mean, the one things I think also that you have is that you've got a divide which has been brought out forward, is where you have the West Africa or the African producers versus the Middle East producers. And you could see that in you had the Angolan minister and the Gabonese minister walk out of the OPEC meeting twice, according to Twitter. They even left the OPEC building somewhere halfway through the debate. So obviously there is a rift there that's been developing, and that rift is probably not going to get any better, because when you look at it, for instance, your UAE, your Kuwait, your Bapco or Bahrain and Saudi Arabia, you've got a huge refining base that also exists within inside your country. And so if you're going to cut crude production, you can max run your refineries and export all sorts of product to the market, and you haven't really impacted your earnings because you're exporting goods versus crude. Where a lot of these West African and African nations don't have, Nigeria, hopefully with Dangote's refinery comes up, they'll be in a similar boat to like Saudi Arabia, like Kuwait, like UAE, like Oman. But until they have that infrastructure where they can flip the switch between exporting crude versus exporting products, it does put them in a disadvantaged position versus that in the Middle East. They have other channels in which they can transform their crude to products and let the products flow.
Yeah, that's certainly one. Yeah, that's something that is very difficult to then to judge, isn't it, and to comment on, because, like you said, the new Middle East refineries, Al Zour, Jizan, Duqm at the end of the year, Citra's going to be upgraded, Ruwais as well. What's to stop them just domestically refining the crude and selling it as products, especially now they've got an integrated system because they've got their own trading desks. Very, very active trading desks. But just going back to, people storming out and throwing paddies because it's not going their way. The group is 14 members, including Russia, who are around that table, all of which heavily rely on oil income. So I think only having 2 ministers throwing their toys out of the pram is pretty good going, if I'm honest. I mean, if it was 14 football club managers who've all got to get together and come up with a decision at the end of the day, we'd still be here middle of next year. So I think, it's all got to be put into context. Obviously, a peripheral producer. Still, every producer is important for cohesion reasons, but just on the peripheral, someone like a Gabon, yeah, if it's not going their way, then it's toys out the pram. But I don't know. I'm not sure how much of a say they have versus an imposing character like Prince Abdulaziz. Who this is the problem. The aggressive narrative, which is what we mentioned last week, and he made it clear people were going to ouch, and no one is going to be able to preempt what the group do. I can understand why he's saying that, but to a certain extent, maybe the market and the vast majority of onlookers who are looking at these, maybe they do want to be able to predict what the group are going to do. Not to take positions and short sell, fine. But I'm not sure ambiguity when it comes to OPEC is necessarily a good thing.
Well, no, it does go against the market stability narrative that they throw out all the time. I mean, they say that, well, we're here to stabilize the markets, but if you're not predictable, then you're not stabilizing markets.
That's right. You increase volatility.
You increase volatility. Exactly. I mean, you go into an OPEC, unless their idea of stability is just ever higher prices, because all their action has done right now is to say that a speculator pre-OPEC meeting, I start buying call options and I go long flat price, go long spreads, because odds are they're going to cut some more. And that's the reaction. If that's what they consider stability, higher prices, then that's not stability. That's just volatility that comes in unnecessarily because they're not doing their job as a stabilizing force.
Yeah, and it's two-way traffic. If the objective of this weekend was to say, right, by the Saudis was, we don't like where flat price is right now. We want to see it above 80. And that meant, what did it close out on Friday? 76.30. If prices then went above 80 and that was a 6% increase, that's creating volatility because now people are gonna have to pay much higher for energy costs. I mean, look, energy costs over the last year, like I said, are down 35%, but are fairly high in what they have been in the past. Now that we're dissecting this, I've used that word a lot today, dissecting, but this is what people are doing because it is a fairly quiet week when it's coming to, what's going on with Fed next week. We'll talk about that in a minute. But we've been in a fairly elevated energy, the end user paying quite a bit for energy over the last 12 months. Okay, a lot lower than it was this time last year. Some element of demand destruction was inevitable. And now people are complaining, me and you are, that demand isn't as good as people hoped. So I just think there needs to be a bit more context put around what's happened over the last 12 months.
Well, and I think, we can roll into financing right now because with the higher energy cost and the higher cost of financing goods, especially now with interest rates up to where they're at right now, and the prospect of those higher interest rates to translate further down the curve, especially depends on how you want to think the FMOC meeting is going to go next week, especially with all the data that's come out. Some people are talking pause. Some people are talking, slight another rate increase of 25 basis points within the Fed. I mean, that just adds on to more costs, which then means that you have to maintain a higher margin value on those goods because you're financing, something that instead of being at 5% is now at 12%. And that incremental increase in finance adds millions of dollars to the cost of a cargo of oil when you actually think about it.
Yeah. I mean, look, it's non-farm payrolls. What were they? Was it 180,000 forecast? Came in at 340?
Yep, 340 good job growth, but an increase in the unemployment by up to 3.7%.
Yeah, see, it's a lot of people were like, that's interesting. I wasn't expecting that. I mean, I think the pivot when it comes to what happens with the rate hike cycle has probably been pushed back a couple of months. Not that it was ever written in stone, but things were starting to come down in terms of inflation. But it seems to be just now a lot more economic indicators people need to look at before calling what happens with interest rates. I agree that the ferocity of interest rate hikes have been brutal over the last 12 months. Arguably, the Fed didn't have a choice, and other fiscal policy across the world, other countries has followed suit. I can't personally, and we'll probably dive into this deeper next week. I know we're off next week. Sorry. Just next week, it's on a 1 week break. But in terms of, I can't see the Fed just suddenly going, right, we're going to pause now. Not when you've got inflation still high, non-farm pay so strong. I don't see there's enough on the table yet for Powell, Jay Powell and his mates to just go, yeah, okay, let's change tact.
No, I think I can see a pause, but I can also see the argument for the rate increase for another 25 basis points because things are still not moving in the direction that the Fed wants to see them move. Now, if what OPEC did on Sunday causes a massive spike in value of energy, which then gets translated back into cost of goods, all it does is add more to the inflationary argument. It doesn't pull away from the inflation argument. So it's almost like you start getting into this, I'm going to say, whirlwind of we cut production and interest rates go up and demand gets hurt even more. So we cut production again and interest rates go up and demand gets hurt even more.
Yeah.
I mean, it can signal that type of spiral that gets out of control because both parties, both, from the energy side of the spectrum and the interest rate side of the spectrum, are both trying to do something that is counter to each other. I mean, increasing the price of energy is great for Saudi Arabia, but it's horrible for the rest of the world because that energy does negate consumer confidence. It also negates consumer disposable income. The higher price of gasoline is, the less money they have to spend on other things.
Yeah, look, I mean, that's right. And, again, I'm biased because I live here, but I think the UAE have played an absolute blinder this weekend. They obviously went into that meeting knowing exactly what they want out of it. They are investing in fossil fuels. They're also, got the presidency for the COP28 this year. So it's very much a sort of argument that with, carbon emissions and having one eye on what's happening there, we also need fossil fuels, and the UAE are putting their hand to it. Gasoline prices here came down for the month of June. That was announced last week. So the end user is benefiting right now from what I would say is a perfect economic situation for the UAE, which is crude prices are still very good. Gasoline prices came off last month because refining margins were down, so the end user's not paying as much. They're allowed to invest more and have it justified because they've got a quota increase for 2024. And, what will happen potentially in a rate hike pausing that we just mentioned because UAE policy is closely linked to the US. So I think, the dynamics of politics are shifting somewhat. And I think that was what my biggest takeaway was from the OPEC meeting was Saudi saying, well, if you ain't going to do it, we'll do it ourselves.
Yeah. Well, and they have the wherewithal to make it happen. I mean, they have the spare capacity and they have the economic bullets to do that. So
yeah. Pew, pew.
The one interesting piece about demand, though, that nobody wants to hear the dreaded C word, but I'm going to say it anyway. COVID.
Oh, right.
Yeah,
well, you could say then. Like, this is a family-friendly program.
Reports out of China showing that COVID increases. There's another COVID wave outbreak in China. Case loads anywhere between 40 to 50 million a day, depending on what you read and what data is coming out. I know COVID is not on anybody's radar, and I'm not saying that there's going to be a lockdown in China because of COVID. That is not exactly that's not what I'm saying at all. What I'm saying, though, is that as people are getting sick, that does impact your underlying demand as people stay home to get through their illness. I mean, COVID can last anywhere 3 to 4 days, people being ill. And so you can see it actually could be a negative drag on the demand in the current market if people are staying home, which I don't know. I haven't seen any mobility trackers yet to say yes or no if that's happening. But it also could impact factories and port operations, what have you, because people are homesick.
Yeah.
So it's something to keep an eye on because COVID hasn't gone away. It's just gone off the radar.
Yeah, no, I can't argue with that. I mean, it's all about news values and what it's worth. And, you mentioned COVID, majority of people would listen but wouldn't react. And I think, very much in the same way that I'm sadly, it's related but not, is the sad situation in Russia and Ukraine. It doesn't hold the same news value as it did, sadly. OPEC, though, does, because it ultimately affects everyone bottom down. Because how much we're going to pay for petrol or diesel or whatever it might be. But COVID, I hear you, but I'll raise your OPEC.
Well, I mean, OPEC would love to see it raised because I'm sure they'd love to see oil get back above $80 a barrel.
78.06, $78.06 for Brent in the middle of the Singapore trading window. I'm pretty sure that's somewhat disappointing if you've got a Prince as your first name and that is your second.
Yeah, no, I'm sure it is. I'm sure it is at this time. But nevertheless, we still have good margins, good refining margins at the moment. So gasoline margins still look pretty good. The heating oil margins, distillate margins still look pretty good, even though we're in the middle of summer. So it is a bit of a dichotomy of how the markets are going and where we're going to end up going into the next 2 weeks, especially with the Fed meeting coming up next week. So
yes, sir. Yeah.
The big question.
Yeah, we're away next week, so don't miss us too much.
Yeah, so the Smoking Barrel will be taking a week off. We'll be coming back in 2 weeks' time, refreshed and rejuvenated with new data points, new information.
I'm not sure about refreshed. I'm going to France to play golf with some mates, so I won't be refreshed. I'll probably look like a shadow of my former self. Remember this face, people.
You might come back looking like a lobster if the weather's going to be like it's projected to be next week.
I'm pretty sure that I can affirm yes.
So tune in 2 weeks' time, and we'll come back to you with more insights and discussions around oil markets. We appreciate the likes, comments, subscribe, and look forward to speaking to you guys again in the future.
Cheers, Em. Cheers, bro.